The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, I posted the chart of Priceline to start the day, but before we do that, I wanted to mention that this rally that started yesterday afternoon when the market closed was pretty much started by Laszlo Barini. He came out with a 3,200 forecast on the S&P in the next 2 years, and then following him was a gentleman from Wells Fargo Investments that said 3,300 was going to be the S&P, and then they had one other gentleman that came on that was a little tempered. He thought 3,000 would be the price, and then of course we've had this big move. I will, after we get done here with this little discussion, I will show you what I think happened, just from a technical basis, using what happened in Germany with the DAX, and that was the primary instigator, I believe, of why things really, started to heat up. Now, back in the 70s, back in my old days at Drexel Burnham from 76 through 82, 1970, well, the mid-70s to early 80s, there was a man in Kansas City, Missouri, Joe Granville. He wrote the Granville letter, and when he came out and said something, he would move the stock market anywhere between 3 and 5%. I mean, he really had the ear of Wall Street. When Joe said something, the market did it. And I remember this situation the most vividly because it was 1979. We were having a Drexel Burnham meeting at Caesar's Palace. They had their meetings there because they were friends of the people that owned Caesar's Palace, so we got some really great room rates. I don't even know if they ever paid for them or not because they were free. But we had a directors meeting there, and because I was in the commodity department, I was invited, and I happened to be sitting at the table with 5 other Drexel employees. One of them happened to be one of the people on the board of directors at Drexel, and he has he was just a really nice. He was the treasurer, and but anyway, Joe Granville came out. He was the guest speaker. Lou Rawls was the entertainer, and Joe Granville was going to give the statement, and so everybody was interested, because he's a really nice guy, just tremendously gregarious and really, really nice fellow. Reminds me of Stan Musial. But anyway, right before Granville came on, this showgirl came out, and she was pulling a monkey with one of these little accordions. And the little monkey was playing the accordion, and she was pulling him around. And in her right hand, she was holding a tray of bourbon or whatever. I don't know exactly what it was. It was something really expensive. But anyway, he came out, and then she opened the bottle, and they poured it to him, and he toasted to everybody, and he said, "Everybody," he said, "these are to the people who don't follow the Joseph Granville letter. I salute you." And the director at at Drexel Burnham said to me, he said, "Sell him short." He said, "That's the high tick." And about 5 years later, I had met Joe in Las Vegas at one of the meetings, and I told him that story. And he said, he said, "That was my high tick." He said, "I never got any higher than that." But I remember the director saying that, and it was really, I can still remember that. So when these people say these things, folks, we have to take them at face value because they're just an opinion like what we have. But just remember that can happen, very, very easily. So opinion is nothing more than that, whether it's mine, Tom O'Brien's, John Logan's, Steve Rhodes, Basil Chapman. That's pretty much one of the things that we should always remember. We have to take the responsibility, for our own actions. Remember, the last 2 days of the month, which would have been the 28th or 29th, 30th and 31st. Those were the and the first 3 days of the month, or the last 2 days of the month, first 3 days of the month, the most positive days of the month. in the Dow Jones or in stock market going back well over 60 years. So we passed that point after today, because this is the third trading day of the month. So we should have a little bit of abatement of this selling, and it was triggered pretty much by the the Barini and these other folks that were looking at it. Now I'm going to before I get into the or what I think is happening is I wanted to show the price of Priceline, because it's gapped up $121 a share. And if you'll notice here, you'll see that red box that I've marked way back in the April-May period. That was an island reversal, and you'll see that all the people that bought that during that time, broke down. Now, if they held it for 2 months, when it dropped another 10 or 15%, they certainly came out, smelling like a rose. But that is an island reversal pattern. Now, what's happening now is we've came up and we've taken out the high of January. We got up to 1405. I saw a print this morning. We're now trading at 1379 in Priceline, so we'll see what's happening. I did hear from Priceline Charlie down in La Paz, and he's now working at Humberto's Taco Shop. He said, if I ever get down there, he said, come down and visit me. That's a joke, folks. I didn't hear from him. I just thought it was rather funny, because I know the guy loves to short this stock. And I certainly hope, Charlie, if you're listening, that you protected your backside, buddy, because we all love you. And just never give up the ship. And I hope you didn't get trapped in that puppy, because it's a pretty tough one. Okay, now I'm going to give you my 2 cents worth of what I think is happening in the market. We're going to have to go to Germany and take a look at it, but this is what we want to do. We're going to take a look at the German DAX on a daily basis, and here again we are up 8 days in a row in the German DAX, which in itself makes it a outlier event, because most of the markets that go up 8 days have a better than 85% probability of moving down on either the 9th or the 10th day. That's the work from Larry Williams that he published many years ago, and the statistics haven't changed. They're pretty much spot on. Okay, we're going to look here at the DAX here, and as you can see, we gapped above the 61% retracement at 115.10. We dipped below it by just a little bit to go in and fill the gap at 1480. So it dropped about 30 points, and then it just it continued to go higher and came within 10 points of the exact 786 of the high that we made back on July, the 20th, which is that really key day. So that's part of the reason that I believe that the market took off, because I happened to, was with the time difference, I'm able to see, what was happening. And when I started to look at it, I noticed that's the occurrence of gapping up above that 61% retracement. And we did that. Our market, the S&P, was still trading at around 1087, but it didn't start to move higher until a few hours ago, when the DAX started to move substantially above the 61% retracement. Now, that's technical. I don't know if it has anything to do with what Barini or those other dudes said, but that's the technical part of what I look at, and I have to rely on that. I mean, I look at the New York Stock Exchange Index. That's the thing that really means something to me. Nobody can play games with, well, I shouldn't say that, because they can play games with anything, but that's the one that's the most reliable of all the things that I've looked at. The S&P, they've got stocks that are skewed. Like, for instance, today, you've got Apple is down, and you'd think with Apple being 14% of the NASDAQ, that would hold the NASDAQ down, but that's not what's happening. And then if you look at Disney, Disney's down 8%, and what did they do? They missed their forecast by 2 cents. Are you kidding me? That's one family that didn't show up from Alabama to going to a Disney World. That's just doesn't make any sense. But I guess you can't make sense out of all these things, so we'll just have to wait and see, what really happens, and we'll just go on from there. Okay, now we talked about Priceline. We talked about the Dow 33,000 forecast and stuff like that. The key to watch today is the New York Stock Exchange Index. I want to post that because I believe that's going to be the one that is going to be what really happens, because we have the emotionalism of this thing with the forecast that they have. And believe me, they really spent a lot of time, talking about this with the folks at CNBC yesterday. So it's really, it was a big thing. Okay, now we're going to take a quick look here at the New York Stock Exchange Index, and it's going to have to, Dow's going to have to be up about 150 to 200 points for us to take out that high of August the 3rd, which is the really key high that is very, very important. If that happens, we could possibly make new highs in the S&P 500 above 2120, but we need to get above that first. That's the whole key. But the bullish bias of the market is over from the last 2 days of the month to the first 3 days of the month, and that's based on these folks that have the funds, the mutual funds and stuff like that. They positioned themselves during the last 2 days of the month and the first 3 days of the month. Why they do it? It's probably related to their billing, but I don't know if that's the case or not. So we want to watch that, very, very closely. Now we have another commodity that we need to talk about that's holding up relatively well. I mean, considering everybody's buried this thing, and that's the gold market, and we've made higher bottoms now. We've made 3 higher bottoms since the 24th of July, and we haven't gone up much, but we haven't gone down either. So we basically have a triangle forming. Actually, it's a pennant because it's symmetrical on both sides, and we really needed to get it above 1104. We've never been able to do that. We got to 1104 on the 23rd of July. We got to 1104 on the 27th of July. We got to 1101 or 1103 on July the 31st. That was last Friday. And then since that time, we've had lower tops, all at 61% retracements, including the one this morning. The 61% retracement came in at 1091, and that was the high that we made earlier this morning, which was the 61% retracement of the high from yesterday. Yesterday's high was a 61% retracement of the high from July 31st. So, that's a pennant. That's basically what you're looking at. So if we break above the 1104 level, then we've got a chance, for the market to move. We're not getting any help from silver or palladium or platinum. All of those have been down. Copper has made some type of a minor bottom. It didn't make new lows yesterday, which was a big surprise. So we'll see what happens with the rest of these as we go through. Now we have a commodity that is let's just tell it what it is, Larry. It's a cross rate. I wanted to share with you because we have a really interesting pattern here, possibly forming here in a cross rate, and I wanted to bring it to your attention. Wow. Okay, let's get over here. Let's come back here, and then we will put this is the British pound versus the US dollar over the last couple of weeks. And as you can see, we made these lower highs after we made the Gartley yesterday. We had a really nice rally of 140 pips. Okay, we're going to take a little break here to pay a few bills, and we'll be right back to finish up with the British pound.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to cover a couple of cross rates here before we get to our break. I just wanted to go through and show you the beautiful harmony that you have with these. We're looking at the British pound versus the U.S. dollar. And as you can see, we had a beautiful Gartley form late yesterday. We've had a nice 135 pip rally going right up to the resistance line at the 786. That forms that 135 lower top pattern that was popular with Bill Longstreet and his dad Roy. And so that means we have really strong resistance there. But if we go popping through 157, that will change that whole pattern. But right now, that's what it's looking like. So anyway, the next one we're going to take a look at, of course, here is the euro, and you'll see here with the euro, we had the same Gartley pattern form. That's basically the structure of the U.S. dollar. We went down to the 786 retracement, down to that level at 108.50, and then this morning with some type of report came out, I don't know which one it was, we went up exactly to the 61% retracement of the high from yesterday. It came in at 109.34, and since that time we backed off about 50 pips. So that's telling us that this trend is still down, and we've made the first objective of the Gartley, of course, but we need this to, if you want the euro to go higher, you're going to have to get it above 109.50. Otherwise, the trend in this is still down, as we've seen many times before. the longer-term chart on the euro is, pointing towards par or 99 on the weekly charts. And as we go through each day, it appears more and more, that's where we're heading. Whether that has an effect on the rest of the markets as stocks or anything like that, who knows? The Chinese market was down just very slightly last night after a big up move on Tuesday. So not too much is happening, at that point. So we will do one day at a time here with this Chinese market, because they seem to be changing the rules all the time. So we want to just to keep our mind open on that. Now, the next one that I'd like to cover is the most popular stock in the world that everybody talks about, and that is Apple. And we are now trading below the lows that we had, below the lows of yesterday, which were at 113.25. We're now trading at 113.10. That's below this, quite a bit below the 61% retracement. It's far below the the ABCD pattern that measured in at 113.74. So, well, that's it. If Apple happens to bottom in here, given the fact that all these other stocks are doing pretty well in the NASDAQ, then this could turn the market, quite a bit. So I don't want this to be a one stock, phenomenon, but 14% of the NASDAQ is Apple. So if Apple happens to weaken more and more, and some of these other stocks like Netflix and a few of these others start to shake a little bit, then you could start to see the NASDAQ sell off. And believe me, it's the S&P on steroids. It jumps around faster than a rabbit being chased by a fox. So that it really jumps around a lot. It's more difficult to trade, of course, than the S&P or the Dow Jones, just because of that herky-jerky motions that it has, where it'll move 20 or 30 points just on one stock, moving the index. So keep that in mind. If we take a look at the Apple here on a little bit bigger time frame, smaller time frame, I would like to show you, what we're seeing, because we're seeing an ABCD structure in Apple. The thing is that it is extending down. We should look at the 1.618 of this last move that occurred over the last 10 days up into the rally, and the 1.618 on this. It was where it's heading, and that's down at the 110.65 level. Let me draw this in because you'll be able to see, because if it fails there, we're in a major bear market in Apple, which we've been thinking for quite some time. But if it fails at that basically 110 area, that's going to tell us that we're going to be looking at some really serious moves to the downside in Apple. We had a pretty good rally. It got up to 117 after we made the bottom. Last night during the rally, it rallied all the way to 117. It's given all that back up, and now it looks like it's got about another 3 points to go, to the downside. So watch Apple at that 110.65, 111 area, because it fails there, you're looking at something that could be, rather sinister. I mean, it's still a great company, of course, and it's got more money than God, but that doesn't mean that it can't correct quite a bit. That's the whole thing. We're going to come back. We're going to talk a little bit about the grains and also the bonds.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have a guest from Nashua, New Hampshire. Lou, are you there?
Yes, I'm here. How you doing, Larry?
I'm above ground, staying away from open graves, my friend. How are you?
Likewise. I was thinking of shorting the S&P.
Yeah, that's probably the thing to do. I mean, you've got a lot of things going for you. You've got a higher opening for one thing, which is nice. You've got a place to put your stop, because if we get above 2105 in the futures, you're certainly wrong. But the 3 days of the month, the first 3 days of the month are highly positive, and this is the last of those. You might want to wait the first hour just to see that it doesn't explode too much to the upside. It's better to probably sell at a lower price than a higher price, just to be safer.
Right. Okay.
That would be my guess. If you get below, I think if you got below 2090 in the S&P futures, that would give you a spot where you could just put your stop above the high and only be risking 10 points, which is certainly acceptable.
Great. Okay, thanks, Larry.
You bet. Thanks for calling in. I appreciate your call, Lou.
Thank you.
You bet. Okay, folks, now we're going to head over to the Midwest and talk about the grains a little bit. We're going to start off with soybeans. We'll try to have Rich Anderson on next week. He's been around quite a bit here, traveling a bit, so we'll try to get him on next week. But we'll start out with the November soybeans. We had that big pattern that formed back on May the 26th that yielded a rally of $1.50. That was all weather related. And then just recently, we pulled down and we touched that 20-man line. You'll see that dark green line. That's the trend line pointing down. We touched it last week, and then we touched it again 2 days ago, almost exactly at the 786 area at 931. We've since rallied 20 cents a bushel, and it looks like we're going to get a little bit more of a rally, and the rally could go all the way up another 40 or 50 cents. Without any trouble, just making a 61% retracement of this. And the beans are in the heart of their growing season right now, from the 1st of August to the end of August. After that, the tasseling is all done. The bean pods have been formed, and it's just a question of when they're going to be harvested after that. And all they have to do is worry about, too much rain during harvest, because if that happens, that can also drop yields quite a bit. But that's what it's looking like in the grain market. We want to thank Mr. Z in the room for bringing that to our attention. What a good buy it was down there at 931, because it's had a really substantial rally. Now, if we take a look at the wheat market, that's been a little bit different situation. We've had just 1 second here, we'll bring it up here, and you'll see that the wheat has actually done virtually nothing. It hasn't moved at all. And believe me, these are different products. One makes flour, the other makes soybean oil and tofu and stuff like that. Butter, all these other things, but the synthetic butter, of course. But the wheat is basically used, for flour and baking and stuff. So it's a totally different crop, and it's pretty much already been made and everything. So that hasn't moved very much at all. Now we're going to take a look now at Christmas corn, December corn. And you'll see we have the same situation, not quite exactly the same situation like we had in the soybeans, because the soybeans is actually a perfect pattern with all the lines coming together exactly, or nearly exactly, to the 786. Whereas with the corn, we are trading at the 786 right now at 382 a bushel, and we need this. It hasn't even taken out the highs of this week or last week, where we've already done that in beans, which is telling you that the beans is the leader of this crop, and that's the thing that you want to watch. So on a short-term basis, keep an eye on the corn, because we should get a good bounce. We came all the way down from 453 all the way down to 375. That's 70 cents a bushel, so just rallying back, to 61% retracement could take it up to 418. So we'll be watching that for a potential buy in the corn here over these next few days to see if it's going to hold these levels. So we've got stocks acting really strong. We've got the Dow's up over 100, the S&P's up 20, the Nasdaq's up 40. So we're starting to see follow through in some of these markets, and that is usually a sign of strength the first hour or two. And then we'll see what happens from that point. We haven't got an opening yet on the New York Stock Exchange Index, but it's certainly going to open a lot higher. And we will follow that after I see the indication of it, and then we will give you an idea of where we're going to be. Part of the problem is I'm going to be off the air here in about 15 or 20 minutes, and so it might make substantially higher highs. But we've got a situation where you want to be able to see if this market is really going to go, crazy to the upside. Because if we get the Dow up more than 150, 175 points a day, that means the Dow is going to be breaking out of some of those highs that we made last week, and that would be should be a bullish thing if that is in fact going to happen. But this is the early part of the day, when the old middle-aged crazies, that was the old song back from the 60s. It happens. Everybody has to be in the market, so they start putting their orders in, right at the opening, and that's usually the wrong time to do it. It's better to wait a little bit and to see, how these things are going to transform, because they can certainly, go blasting to the upside without any trouble at all. to see that. Now, you realize that the Dow Jones, folks, is being held back by Walt Disney. That's 80 points of the Dow Jones is in Disney. And so if Disney had any type of buying in it, someone would come in and buy it, or the earnings would have been a little better, the Dow would be up over 200, way over 200 points. So because we got the S&P is up, 15, and NASDAQ's up about 40 something, and the Dow is up 90 or something. So that would be well over 180 in the Dow just based on the one stock. And that's part of the problem that we have with that, is that it gives you a better indication. Okay, now we're going to switch over to the Treasury bonds, and looks like I'm still thinking that we got a chance to go to that 58 level. I thought 57 was going to be a pretty strong resistance, but we went above that by more than a full point in the bonds. So the thing that we want to watch now is what's going to happen here, because one more move up, another ABCD move, could take him up to that 158 level in the bonds, and that's what I would like to be looking at. Folks, the longer term bonds and notes are going down. I mean, there's just no other way to put it. These charts look so bearish on a long-term basis, and that means interest rates are going higher. And I don't think it's going to make any difference when and if the Fed does it, raise rates, but that'll be the first of many, I believe. But, we live in interesting times, as the old Chinese curse is, so we'll, play it by ear. But the charts on these long-term are, certainly, very, very bearish. If we, I have the September bond chart up, and I don't want to put that up. So give me 1 second here to take a look at this. And I wanted to show you the note chart, because that's the one that really determines what our interest rates are. And we'll just see where we are with that. See, they just look so bearish. I mean, it's just, I don't know how anybody can be bearish or bullish this stuff, but what do I know? We just completed that. The notes just barely took out last week's high and have reversed. Had you shorted the notes, you would have been in great shape. If you shorted the bonds, you would have taken a loss, and unfortunately probably near the high, but it's backed off now. And we've had two strong down days. In other words, rates have jumped up a little bit these last couple of days, and it looks like we are heading higher in the interest rates, which means lower prices in the bonds and in the notes. So those are the ones that we want to be watching from that perspective. Okay, now we have a question about a particular stock, and I'll try to bring it up to let you take a look at it. Give me 1 second, and it is one of the favorites that everybody has, and that is JP Morgan. Let's just get it up here, and we'll see where we are, see how much it's up today. Okay, it's nearing the old high a little bit. It's not even close to the old high, but we'll just look at it here, put the chart up, and then we'll get the daily in there. We'll be able to see it. Let's start out with the weekly, because this has made such a big pattern on the weekly that it's really shows that this market should be turning down for JP Morgan, and we're trading at 69.09. The old high was 70.51. That was two major ABCD patterns and a three-drive pattern coming in at the exact same price. And now what we're doing is this, on the last 2 weeks from when this happened, we're not even at a 61% retracement of that move down. So that's telling you that you're having a little bit of a difference on the downside than you might want to be watching. So that's part of the situation that we're looking at with JP Morgan. And then we had two other requests. Let me try to do these quickly. Some of these I don't have because I don't always watch them that closely. But the other one is McDonald's. And if you'll give me a second here, we will bring McDonald's up here and we'll take a look at it. With McDonald's, we had a shooting star pattern occur after the earnings that day. And we were now below that area, and it's up on the day today, but it's near the low of the day. It's just still a little early in the morning. But if you notice that McDonald's chart going back to last March, you had a three drives to the top. I mean, they went exactly up to that 101.20 or 101.02 level, We did that in late February. We did it again in May, and we did it again in July, on July 31st. So those are things that tell you that that's a pretty good indication that that's a very, very strong resistance in McDonald's up around that 101 level. If we go above it, then you're looking at something that is incredibly bullish, and you don't want to to stand in front of that one. All right, now we've already covered Priceline. That was the first one that we did for the day. And the next one we want to take a look at, of course, is Walt Disney, because it's in the news. We've had a request to take a look at Disney here. That's the stock that's been basically in a runaway for a very, very long time. And it's had a little bit of a correction here right now. And we're now trading quite a bit below the ABCD level that came in at the 118 level. And we got all the way down to 111. Well, that's a big hit. That's almost 10% in that stock, and that's so much of the Dow. Wow, if that thing turns around today, the Dow will be up 200 points. But that's what's happened. We have this big gap. That's highly unusual, especially I noticed here on CNBC, I've got it in the background, that the earnings were up 13 cents or only off 3 cents from what they expected. I don't know who does the accounting there, but that doesn't seem like very much, considering that's what we're watching here. Okay, now I've had one other request, and that is to take a look at the silver, and we will take a quick look here. And the silver is still trying. It's like it doesn't have the same positive pattern that we have with the gold market, but it is trying to hold. But it's moving up a little bit this morning. But we did come down and test the bottom that we made on the 24th with silver, and we came to almost the exact same bottom. And now what we're doing is we're making a little Gartley pattern in silver. And if you're bearish silver, you're going to have a great place to sell it here, because it's making a beautiful ABCD pattern up here at the 61% retracement, up about another 10 cents from where we are. Give me 1 second here to mark so you can see it clearly, and then we will put the chart into TFNN so you can take a look at it. And I was really kind of hoping to hear if we heard from Priceline Charlie, because I was certainly worried about him, knowing what was happening with Priceline stock today. But I think he's probably going to be okay, is my guess. So that's what we're looking at in the silver, about another nickel higher. That's going to run to some resistance there at the 61% retracement in silver. So we'll see, how we're doing. We're still strengthening here in stocks. We got the Nasdaq is almost above the. Let's just put the Nasdaq in to show you where we are, because we're almost back to the 61% retracement of the whole move down. That comes in at 46.14. And whether that'll stop the market or not is anybody's guess, but that should be, some type of resistance there that would give us a little bit. That would be taking out the highs of the 31st, which from a cycle standpoint is not the best situation, but, this can happen in these emotional type markets, that we have right now. I think it all relates to Apple and Disney today, because if both of those stocks or either one of them start to rally from and when things drop like that, people will look for a buying opportunity. That could make the market just literally go, ballistic today, where we could have a move in the Dow up 250 points, something like that. And, you don't know if that's going to happen or not, but it's certainly capable of doing that. We've reached the 2104 level in the S&P, which is very similar to what we have with the Nasdaq. We'll take a little break here, and then we'll wind it up and check with the New York Stock Exchange Index and see where we're trading.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times Bull and Bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've posted the chart of Apple showing you that we opened a little lower in Apple and taken out yesterday's low by just a little bit. And then, of course, it's rallied almost $4 a share. That's been causing the NASDAQ to move because Apple is 14%, of the NASDAQ. So we'll be watching that. Now I'm going to bring out the New York Stock Exchange Index here to take a look at that because the market is strengthening and we've got a chance to get above that high of last Friday at 109 and change in the New York Stock Exchange Index, which we will most probably do, and then we'll see how much of a bounce we get. We just made the 61% retracement on the NASDAQ up at that 46.15 level. We're very, very close to it. Well, it needs to get a little bit higher in the S&P, but we get the S&P above 2110, folks. It can go anywhere it wants, and it might even make new highs. And I will certainly be the most humble of radio announcers, because I don't think you can do it. But, these markets will jump around quite a bit. I mean, you can see what happens just with a stock like Disney, a great stock. I mean, the stock's been up forever, and someone comes out with 3 cents, and the 3 cents difference, and they drop it 10%. That's a lot of money. And my guess is it'll probably end up only be down about $4 or $5 on the day, given what the rest of the market is doing. So we're at some critical levels here as we come in this morning. Keep an eye on that New York Stock Exchange Index. That's the one that is the real market. And if we take out that high from August or July 31st, that's going to be a significant cycle point. Technically, it doesn't mean very much, but from a cycle point, it certainly is. We will watch it very, very closely. Okay, we've got one other stock that someone's asked us to take a look at, and that, of course, is Amazon. We're going to bring it up, and it is not even moving compared to the rest of the markets. That was the one that went crazy when it opened $100 or higher, and we've really gone nowhere with this. It's still set up for a potential island reversal from July 29th, but no one in the world would ever expect that. So live every day in an attitude of gratitude, and do the old cowboy a favor today and do something nice for somebody that has a whole lot less than you.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.